Right now, 7 of the 10 top national carriers are not writing homeowners insurance in California. That to me is the biggest wake-up call, I guess you would call it.
So does that open up the market to all of your, like all the brokers or companies that is still doing business in California? Man, I'm excited, dude. I am really looking forward to this live stream today just because, we've been getting a lot of the viewers asking about insurance. That's why we're so glad you're here today, Chris, so that way you can kind of go over all of that. But yeah, I really, really want today to really just be about the insurance industry. So yeah, man, why don't you kind of introduce yourself and then we will go from there.
Sure, yeah. My name's Chris. I'm the owner of Kamara Insurance Agency here in the Sacramento area, and we're a small local agency, and we're just trying to help people the best we can.
We kind of spoke a little bit before we came live, and you said that insurance industry, like you've been very busy.
Yeah, this is the busiest I've ever been. There's so many people getting non-renewed and so many people seeing rate increases that they're shopping everywhere. And I know that in my agent network, which is a very large network, that everybody's experiencing it. There are many, many people shopping, looking for either better coverage or coverage period. Like there's some areas of Sacramento, of the foothills up in Auburn, that they just can't find coverage, and they're trying their hardest to avoid the state-run program, which is the California Fair Plan.
Can you share a little bit more about that, what that is?
So the California Fair Plan is the carrier of last resort in California. It is run independently by the state of California, so it's not a part of the Department of Insurance, as my understanding, and I could be incorrect. It is a separate carrier, and it primarily covers the peril of fire. So the biggest reason is, wildfire here in California. With the Fair Plan, most people will need to get something what's known as a companion policy, or a DIC, which stands for Difference in Conditions policy. Those two policies together, the Fair Plan and the companion policy, comprise what a typical homeowner's insurance policy would cover. Let's say you have a home and you have the Fair Plan and a companion policy. If someone's driving down the streets, not paying attention, and drives through your home instead of staying on the street, that would be covered by the companion policy. But that same home, if there was a fire and the home burned down, that'd be covered by the California Fair Plan. So you need both to properly cover your home.
Now, does it make a difference what type of fire it is? Like, so obviously with wildfires, that's one thing, but like if there was a fire because the stove caught on fire in the furnace, so it's fire's fire, that's what it covers.
Peril is the peril, yep. It doesn't distinguish between wildfire and regular fire. I've had some conversations with people, and none of this is anyone of influence, but it would be great if they could define wildfire, charge a separate deductible for that wildfire, and do it that way. As an example, if you had a $500,000 home, I know we're in California, but let's just use $500,000, and you had a $50,000 deductible for wildfire, yet had a $1,000 deductible for all other perils, most people would buy that because that's the catastrophic loss, right? If they lose it and they get $500,000 and they have a $50,000 deductible, they'll take that $450,000 and build a little bit of a smaller house, and they accept that risk. I know a lot of people have had conversations would do that. At the same time, if you have a smaller fire, let's say in your kitchen, and it costed $10,000, that's where, it would be nicer to have a lower deductible, like $1,000 deductible. That way you're covered and you're not coming out of pocket $10,000. But that's not the way we live today. That's not the current environment that we're in.
Why are they making this so difficult in that regards to where there is no separate?
I can only give you my opinions.
Of course. That's why, yeah. We love opinions.
The number one thing as to what the carriers are having and California Department of Insurance is having is there's a law that dictates that the insurance commissioner must approve any rate filing. So they can't, like in other states, just file a rate and use it. The insurance commissioner has to approve it. In addition, the way that things are currently set up, carriers cannot account for reinsurance in their rate filings. So there's a separate cost associated that's completely outside of their rate filings for justification. The carriers that aren't playing in California right now, they aren't because of two main things that they cite. And number one is catastrophic loss. So California, that's wildfire. And number two is inflation. I mean, anywhere you go right now, I just had lunch today, and I guarantee it's probably 30 to 40% more expensive than it was a couple of years ago to go eat out. Same thing with building a home. Your home, on average, if you think about it, labor's gone up, materials have gone up, it costs more to rebuild a home. And these carriers need to make a profit to stay in business, or else no one's going to do it and lose a whole bunch of money over and over and over again. They're waiting for some equity to make it make sense, and then hopefully they'll be able to come back into the market. But right now, 7 of the 10 top national carriers are not writing homeowners insurance in California. That to me is the biggest wake-up call, I guess you would call it, that 7 of the 10 top national carriers are not writing homeowner insurance in California.
This might be wrong, but I heard from somewhere that when a carrier leaves California, they're no longer welcome to coming back to California in the future to write policies or anything like that.
Sort of. They need to file rates and they need to be approved by the Department of Insurance. So there's 3 different things that are going on. One is carriers are staying and they're putting up these hoops to slow the pace of policies being written. There's other carriers that are staying, but they are not writing any new policies. And then there's carriers that are completely leaving the state and they're not writing any business whatsoever, and they're non-renewing their current client base.
So does that open up the market to all of your, like all the brokers or companies that is still doing business in California, to where it's like, yay, like customers up for grab now, market share?
There's no yay to this. There is opportunities, and there are carriers coming in and they're saying, hey, we want to target certain risk profiles and we're okay with that, and they want to grow market share. But as far as yay, I think no one's happy with the current situation in California.
You said before that everybody wants to kind of avoid that state-run insurance.
Yeah, California.
So I'm assuming that that's because it's more money, or is it just the fact that you have to have 2 different types of policies? And then if you have that policy and then the fire protection comes from one person and you have to have the companion policy, who writes the companion policy?
There are specific carriers that write companion policies.
More expensive, I'm assuming, to have both, obviously.
As a generalization, the FAIR plan with the companion policy is going to be the most expensive option as a generalization, not everywhere. But there's also the headache of having 2 different carriers, right? 2 different bills that need to be paid. If it's escrow, there's 2 different policies to be paid. It's just more moving parts that could go wrong.
But there's still an option if there's not one of these big major companies. There's still options out there, though, basically.
Yeah, that's the only option.
With that plan, the state will step in, though. But then what if you can't find a companion company to do the rest of it, though?
Then that's all you have. You have the California FAIR plan.
Wow.
Man, I feel like that's kind of like a monopoly, isn't it?
I mean, how do you force companies to write insurance? How do you make...
Well, you can't, right? Especially if they're losing equity, like what you were mentioning earlier, right? That's for the cause of them moving out from California. So that part makes sense, because for a business to be in business, it needs to be profiting, right? So I get that. It's just
make it an equation to real estate. If you're a landlord and your mortgage is $5,000 a month and your renters are paying $4,000 a month and you're losing $1,000 a month, would you keep being a landlord?
You're gonna sell the house.
You're gonna sell it, find every reason to break even. With that, again, Chris, thank you. I'm gonna log us out and we're gonna let you guys go. Okay, Chi fams, thank you again. Take care. Peace out.